Good afternoon. Today is Thursday, January the 4th. The time right now is 34 minutes past noon in Singapore. And overnight, we continue to see U.S. equity markets continue to come under profit taking in the second day of trading for 2024. And we knew that U.S. equity market had a fantastic run in the last 2 months of 2023. And this early profit taking is probably a sign of trying to take some money off the table ahead of tomorrow's FOMC meeting, tomorrow's non-farm payroll, I'm so sorry. So last night we had the release of the minutes of the last FOMC meeting, which was held between December 12 to 13, and there was nothing new in the minutes that we not already knew, that the Federal Reserve has calling a halt to its very aggressive rate hikes from 0 to 5.5% in interest rates, and the likelihood of rate cut is now looming over 2024, with many expecting the Fed to actually cut 6 times, okay, which is very, very aggressive. And this is actually what's behind the rally in equity markets for the last 2 months or so. But is this going to be the case? And when we look at the market, it looks like technically the market remains well supported, although the Dow Jones Industrial Average is trading at 37,790. Just yesterday, we can see that the market has come to a new high. But again, we are a little bit leery as to the breadth of this rally here, because we knew that the equity markets has been supported by no more than 7 stocks, and this could be a problem going forward if there is no increase in the breadth of the rally, meaning to say that it must go beyond the rally in the 7 magnificent stocks that we knew about, largely in the tech sectors. Then this rally here could be compromised. But going ahead, technically speaking, it does look very firm. And in the Dow Jones Industrial Average Cash Index, there's a possibility the market may go down and test the 36,500 to 36,600 levels before it can find its bottom and to continue to trade even higher. In the S&P 500, this is about the only major equity index that has failed to register a new high, and we knew that high was traded last year in January the 4th at 4,818.62, and last year's high actually was a little bit short of taking out the all-time high at 4,793.3. And we can see prices are coming down a little bit right now, and the immediate support is probably this swing low here that we see here at about 4,694.3 again. But I think there's a likelihood that we may see even lower prices. I have the opinion that maybe the market may even go as low as 4,643 to 4,655 before it finds a bottom at the start of this flush here. You can see this very aggressive move to the upside, and this is where the origin is. So there's a good chance the market may actually test back this level before it attempts to trade into a new all-time high. And in the Nasdaq has a relatively larger pullback yesterday. The high traded is just under 17,000 and 16,969.17 in the cash index. And last night we saw this index pull back to 16,352.14, which is the largest drawdown among all the major equity index in the States. And going forward, I think there's a good chance the market may actually attempt to test the November close, which is at 15,947.9. So let's see if that's going to be the case. But I think by and large, equity markets do have the momentum to go even higher unless we see an acceleration in the profit taking that we have seen over the last 48 hours. And over in Nikkei actually went down very sharply this morning before pulling higher. We can see the market actually have a big move to the downside to 32,670 before it's currently trading above 33,180. So we can see there is this big move here. Not sure what is the catalyst for this, but we can see that the market is getting very, very toppish because it has finished a 3-wave rally and is possibly looking to trade to the downside. And this morning, testing of the 32,670 could be more of the same thing to come in the following weeks. Okay, and in the Hong Kong market, you can see Hong Kong very much is sideways right now. We can see the yesterday's low was actually at about 16,559 in a futures contract traded in Hong Kong, and this is showing us this is currently a corrective pattern. We have seen prices went up to as high as 17,255, actually fell short of where the ideal level is 17,299 to 17,540. So basically, maybe there's going to be another leg higher, but by and large, this is a corrective move, which means that over time, we will see lower prices, perhaps even taking out the low here that we saw last year at 15,980. And over in the dollar index, we can see dollar continue to edge higher very, very strongly in the dollar index. Futures traded on highs. You can see that the dollar index managed to go to a high of 102.42, which is already higher than the previous high here at 102.28. So this is actually laying the groundwork for further rise in the dollar index, and any kind of pullback will be seen to be a buying opportunity, at least in the short term. So if the market do come back and test the 101.37 to let's say 101.03, that could be an area to pick up some long position, because I do believe there's going to be a missing leg to challenge the 104.30 levels. And over in the euro dollar, I think we all knew euro dollar is trading conversely opposite to what we are seeing in the dollar index. And if that is the case, we probably will see higher prices going forward. For a time being, we can see that the euro dollar has actually come off on the back of a stronger dollar. So we can see that the euro dollar may actually bounce back to 110 to levels. So if this is the case, 110.15 to 110.30 could be an area of opportunity to take a short-term trade for a three-wave pullback to maybe to challenge the 107.24 levels. Sterling have a slightly different feature here. We can see that the highs are getting higher, and the lows are getting marginally lower. So we could be seeing something of an expanding diagonal or something. Okay, so do watch out for if there's going to be a rally for the market to take out a 128.27 high marginally before it comes back down again. And over in the Aussie market, we can see Aussie remains weak. And if there's going to be a bounce anywhere between 0.6780 to 0.910, for example, sorry, 0.66890. I'm talking about. Okay, again, one more time. If the market managed to rebound to 0.6786 to 0.6806, I think that could be a good levels for positioning a short for another continuation three-leg pullback to perhaps challenge the November closing at 0.66 or even as low as 0.6520. Okay, and over in dollar Canadian, with the dollar strengthening, we also see dollar Canadian also benefiting from this rally here. And the high traded overnight is 133.72, and there's possibility for further gain, especially if it pulls back to test the 132.30 to 132.55 levels. So this could be a buying area for a challenge of this high here at 136.20. Dollar yen also benefited, okay, but I think the top side is quite limited, because we can see that while the dollar yen has bounced back to 143.73, it's overshadowed by the possible changing of monetary policy by the Bank of Japan. So that is probably keeping a lead on the further rise in dollar yen, and we will see what happens if it can actually go beyond 144.95 levels. Even if it can, I think the first barrier to higher prices will be 145.30 to 146. So it's a high to sell as far as I'm concerned. Okay, and over in precious metals, we can see precious metals has pulled back on the strength of the dollar itself, but this is temporary. You can see that the low traded last night is $2,030.70 thereabout. So there is a possibility we may actually see higher prices going forward. Okay, despite the dollar strengthening. So right now we do expect some kind of a pullback in the dollar, at least marginally. Then that will lay the stage for higher gold prices. However, whether the market can take out the $2,088.55 remains to be seen. I do not think that will be the case. I think overall there's a larger degree three wave that we are to contend with, which is exerting downward pressure on gold markets. Okay, and over in the silver, we also see something very similar. The high traded here is at $25.91, and then the low here at $22.49. We can see that this is possibly working out to be a three-wave move, and if that's the case, we could be seeing lower prices ahead. And that being the case, I think somewhere below $22.49 is going to be a foregone conclusion. And over in oil, yesterday we have a big move in oil market after market marginally traded below $70 per barrel, and then we saw a 3% rise after we knew that the Iran has actually sent in a destroyer into the South Sea, the Red Sea, and this is increasing tension because the U.S. carrier is actually within the vicinity. And we also knew that over the weekend that the U.S. Navy has actually took out 3 boats belonging to the Houthis militants and killing tens of these militants itself. And I think this is going to be retaliation by Iran. And overnight, we also realized that there are reports that of a major bombing incident within Iran, where they are gathering to commemorate the second anniversary of the assassination of a Iranian Revolutionary Guard general, and that could actually cause Iran to slash out, and that could increase tension overall. The situation in the Middle East is very conducive to higher prices because tension is rising, and that could actually see oil prices going back to $80, maybe not as high as $80, maybe at least $79. I think that will be a possibility. Technically, we should see a three-wave rally also equaling this level at $79.56. And over in Bitcoin, we have a major sell-off this morning. The high traded 45,000, almost 900, saw a slam down to 40,800 overnight this morning. We can see that this is, of course, on the back of some kind of rumors that buys Bitcoin on the back of more details of BlackRock ETF application for spot BTC, right? And this sell-off was also based on rumor that the SEC is supposed to make a ruling as early as yesterday, and of course there was no new ruling that comes in, and there were rumors that the SEC is going to reject all 14 applications, which saw Bitcoin prices plunging to 40,900 this morning, and right now it's currently trading at 43,123. So this market right now is very, very dicey. There's a lot of rumors flying in the marketplace, and just not a very overall not a very conducive environment to trade. So do watch out for rise in volatility in Bitcoins and other tokens as we are speaking. So this is all I have. Tomorrow we have non-farm payroll. I'll be doing a live trading from 9 p.m. Singapore to 10 p.m. So if you're interested, look out in my Facebook for the link. Register for free, and let's see how I trade in a live market condition. That's all I have for you, and I'll see you tomorrow. Bye-bye.